want to get the jump on tomorrow's non-farm payroll report from the Labor Department, I suggest you take a closer look at what's happening with the company that is the best read on small and medium-sized business hiring in the U.S. I'm talking about Paychex, P-A-Y-X, the country's #2 payroll processor, specializing in small and medium-sized businesses with a growing outsourced human resources management division. While Paychex hasn't moved much year to date, the company just reported this morning, meeting Wall Street's expectations, giving better than expected guidance for the full fiscal year. Ultimately, this was a very fine quarter, but here's the thing. If you expect the Federal Reserve to raise rates later this year, as I do, then Paychex could be the stock for you. Between the moment when Paychex gets money from its clients and when you cash your paycheck, they're collecting interest on the cash while it's sitting there, which means that when the Fed hikes rates, Paychex will suddenly become substantially more profitable. Meanwhile, the company's paying you to wait with a bountiful 3.2% yield. So let's check in with Marty Musi. He's the president and CEO of Paychex. Hear more about the quarter and where his company's headed. Mr. Musi, welcome back to Mad Money.
Thanks, Jim. Good to be here.
Marty, I saw a lot of positive signs here, but it's not really just from the hiring. It's really about all the other things that you've built over the years. They're really kicking in now, aren't they?
Yeah, they really are. You know, we saw 9% growth in revenue year to date. Our HRS, our non-payroll business, hit over $1 billion in revenue, a new high mark for us, and grew double digits in our fiscal 15 that we just finished.
Marty, how much of that business is taking from others, and how much is it from just customers that you had other business from, and you said, listen, you ought to be using this?
Well, the majority of it is coming from our customers who we see need more services and we can add more value for them. And we're also selling a lot more of it right up front to brand new customers who we see. We used to sell payroll, then come back and sell them other items. Right. We're now doing it in an integrated selling fashion.
Are you taking any business away from some of these cloud companies that we always see that say that they're doing human capital management?
Oh, sure, absolutely. I would say it's probably 70% our existing clients who we're adding more value to, but we certainly have the other 30%. We're taking share from other clients, a big competitor, as you know, in national competitor, and the smaller competitors really just can't compete with the cloud and the SaaS services that we provide on a total human capital management scenario.
You know, I wanted to ask you, we've been doing a lot of work on this shared economy, where people have 4 hours they work here at Postmates and 3 hours they work for another, or for Instacart, whatever. How much of that is will Paychex benefit from, or does it have to be that the companies have to be found to be employers for Paychex to benefit?
Well, no, I think we'll see. Well, mostly they're going to be employers that we're going to deal with, but we certainly can deal with anyone, whether it's a shared kind of economy type of person or not. You know, you are seeing more and more of that. In fact, you're seeing more part-time workers, which is interesting. We saw from the index this month, we're up 1.5% in part-time workers across the country, which is really interesting from an overall worker environment perspective.
Well, let's talk about that, because I think this is the secular change in the U.S. economy. The more I study this, the more I realize that people are putting together a mosaic of hours. They're not doing one job. They're doing 3 jobs. Maybe that's because there's not as many big jobs around. But your number, that's just an astonishing growth number, isn't it, for your company?
It really is. Now, this is the overall economy, Jim. This is the employment situation has gone from, has gone to 92% for full-time workers and 8% part-time. That's up 1.5% from last year for part-time and 2.5% from 2 years ago. I think this is the Affordable Care Act and the environment that you're talking about. There's just a lot more part-time workers for the companies to be careful when they're hiring.
Okay, I want to ask about another thing. We had H&R Block on recently. They said that a lot of the hacking that you see is to get your tax ID so that they can file for your tax return ahead of when you do, and then you're stuck. Can Paychex help me in cybersecurity?
Well, absolutely. We have something called MultiFactor Authentication, which is, we're going to protect. The biggest issue is that small businesses are allowing someone to get in on their online or on their account. They're getting their username and password and then coming in as the client. We have products, the security that we have will now prevent you from doing that unless you get a text or a code or a challenge question. If you want that level of security, it's up to you as a client, but I'd certainly take it.
And people are taking that because the amount of fraud that has gone up in the last 2 years is astounding.
It really has. The IRS tax fraud has gone up, as you've seen, tremendously, and we're encouraging our clients to take either the text or the call-in number that you can put in when you're dialing in from from a laptop or a PC that we don't see before. That's what it is. So it's fairly convenient, but I hope more clients take it.
All right, but I was listening to you the other day. I guess it was on Squawk. You're doing your index. There are parts of this country. I know that overall we're still not seeing the hiring boom that you and I want to see. But there are parts of this country where it is booming. It's almost counterintuitive where it is Washington, Michigan. What's going on?
Yeah, I know it. I think some of that, Jim, is just, we've seen Texas kind of be strong right along, especially Dallas. But now we're seeing places like Detroit be strong. I think, when you look at our base year of the index, it was 2004. I think they might have been in a recession earlier than everybody else, and they're coming out of it. But they're also investing. They're doing a lot of investing in places like Detroit and Michigan, and that central part of the U.S. is stronger.
Now, also, I wanted to ask your company, when I was going over your conference call, you guys know the muni market really well. And I just got to ask you, because I know you would never fool around with this Puerto Rican stuff, but are munis okay? I mean, we have a lot of people who watch the show of municipal bonds. You guys are probably one of the smartest buyers of munis. How would you characterize that market? Because there was someone on Squawk this morning that made me feel very scared about some of the states that are out there.
Well, I think, sometimes that gets overplayed. We're obviously very careful with the $4 billion in funds that we handle on average. And there's a lot in munis, and I think you just got to pick your states. But I would say for the most part, the states are careful. We're careful where we invested. I think munis are still pretty safe. And that might be a little bit of overkill, I think.
Oh, I'm glad you said that, because one of my theses is that people get scared out of stuff that is actually safe. They sell at a bad price. There are some paper out there that if you listen to your broker, you're going to know it's a little dangerous. But I always knew that you guys are shrewd buyers. I want to thank you for not scaring people. And for a good quarter, Marty Musi, President and CEO of Paychex. Good to see you, sir.
Thanks, Jim.
Guys, there's going to be rate hikes. This is an easy way to be able to profit from the rate hike. Not many other ways. Not many other stocks I can say that. Paychex, it's good for me, good for you. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.